Thanks for watching my video today. My name is Mike, and this video is about mortgage rates. We kind of get into what impacts them on a daily basis. We go into cover some economic reports that are given on a daily basis, as well as some headline news that may also have implications in driving the markets in either direction. We'll kind of let you know what the big catalyst for that week is, if there's anything in the news that might impact rates on a weekly basis, and kind of give our insight into short and long-term rates. We'll give you the trends if it's going up or down. We don't get into the rate quotes as there's too many variables that kind of go into it, and of course, there's different loan programs. Obviously, a jumbo would be different than that as a conventional, and some of the government loans like your FHA, VA might be different than that of a conventional loan as well. However, if you guys are looking for a rate quote, I'm here to help out. I am a loan officer. I do work with a national lender, so we can certainly help you, provide you with some rate quotes if you're needing some. If you're looking to refinance or purchase, please give us a shout. We're here to help out anyway. If you got questions about anything, again, we're here to assist in any way, any capacity as possible. Without further ado, why don't we jump right into the report today? We do got the big catalyst for this week, and which we've been looking for is jobs data from the Bureau of Labor Statistics, or BLS. Um, we'll start off with the average earning for the month over month in June. So in May, it was actually revised from 0.5% down to 0.4% month over month. But forecast for June was supposed to be 0.4%, and it came in a little under at 0.3%. Now, here's the big number we're looking for, the non-farm payrolls. Now, the previous month, back in May, we had 559,000 new jobs created. However, that was revised a little bit higher to 583,000, which is good news. Forecast for this month was 700,000, and it came in much hotter at 850,000. Now, we'll touch on this a little bit here, but some comments I will make about that. But just give me a minute here. We'll go through the rest of these here. Average work week in hours went from 34.9, was reduced a little bit to 34.8 in May. Forecast was supposed to be at 34.9, and it got further reduced down to 34.7. So not only was May reduced, but it dropped even further in June. Now, unemployment rate went from 5.8% in May. Forecast come for 5.7, a dip. However, it went upwards to 5.9%. And that's because more people came into the labor market and came into the job market on that as well. So that's one reason why we saw a little bit of a spike this in June here. Factory orders month over month. We had initially came in at 0.6% drop in May. I'm sorry, in April. However, it was improved. It was risen upwards to a drop of 0.1% instead. So it was not as good, but obviously not as bad as we initially thought. Now, forecast for the month of May was at 1.6 and came in a little bit better at 1.7%. So, decent number right there for factory orders. Little mixed bag. Now, the comments I was going to make regards to non-farm payrolls is we'll jump over here. Stocks are up. As if you've been watching my videos, we're talking about Goldilocks, and it was not too hot, not too cold. It came in about a good number here. It's not enough where the Fed's going to go ahead and start tapering and making drastic changes. So it's a good number. We're seeing progress in the economy, but not at a dramatic pace that the Fed will automatically start pulling back on it. So the stock market's liking it. Now, we did mention yesterday the OPEC Plus. What that means is the countries under OPEC, but also Russia, were meeting, maybe talking about a drawback in production, and they decided to go ahead and delay that decision. So, so oil remained about $75 a barrel so far this morning. Let's see how this is impacting mortgage rates today. It's like in the news. It was also good for mortgage. So as you saw, we did kind of improve a little bit. We got that little bit of a hammer right here. So that kind of helped give us a little bit of improvement. We did close just above the 25-day moving average. Now we're working at the 50-day moving average, kind of trying to put some pressure on that 9 basis points. So we're going to see a little bit of improvement in our pricing today than what we saw yesterday, which is obviously good news for those who are refinancing and purchasing. And as you can see here, yields are breaking below here, this level at 1.43. Last time we did that, next day we worked our way up here. So be cautious. Let's see if we get a final break in. We won't know until we have a few days under this floor or this ceiling now. We used to be a floor as we were top of it. Now it becomes a ceiling. So if we could stay below it for a while, this becomes a ceiling, and hopefully That might give us a little bit more reprieve for mortgage-backed securities to get better pricing ahead here. So just be a little cautious ahead here. But look, so far it's been a great day for us. We are heading into a long weekend with the Fourth of July Independence Day. I hope you guys have a good, safe weekend here. And again, if you guys got questions, I'm here to answer anything I can. And please feel free to reach out. Until then, we'll see you guys on Tuesday as the markets will be closed on Monday. And we'll see you on Tuesday. Thanks so much for watching. And if you guys like these videos, please hit that smash button. It certainly helps us out. You guys have a great rest of your day. Enjoy your weekend, and see you then. Bye-bye.